The market craters as the bears take control. Is it game over for the bulls? This is Invest with Jacob. Okay, guys, so when I left you last week, I was looking for the bulls to hold support and rally higher, and that did not happen as the bears were able to break support and take control of the market and now are testing the lows. Now the question is it game over for the bulls? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott wave theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, a couple housekeeping notes before we jump into the charts. I saw some comments about me not being on Thursday and Friday. I was moving across the country. I mentioned this in my video on Tuesday that I would not be in at the end of the week, and it had nothing to do with the market going down. I will be here every day that I can, and I will try to tell you when I'm not, but I don't run from the market or my analysis. For now, let's jump into the chart and take a look. Okay, guys, so here we are on the 1 hour futures chart for the S&P 500, and last week we were looking for this to be an A. They were holding right in here. We were looking for a B and then a C wave up, okay, to rally off of this low to give us a start to a move higher. Obviously, that did not occur. They were unable to hold support, and there were a lot of reasons to think we should hold support. The overlapping nature of the market to the downside, the kind of weak move in the NASDAQ, the bottoming signals, a few different indicators in the way they were pointing. There was just a lot of reasons to see the bulls holding support here, but they did not. And when a strong support area breaks like that, you can expect a waterfall type effect because this is strong support, and that means strong selling had to get through. And once it does, there's nothing underneath of it, and they take it down to the next level of support, which is where we are now. So what is playing out? Well, off the top, our alternate path has always been the diagonal to the downside, where you have 1, 2, 3, 4 comes up and overlaps 1 because it's a diagonal, and then 5 down into this 4100 area. 4096.50 would be the actual target for this wave 5 down. So this has always been our alternate path should they not hold that support. We've talked about it pretty much for the last 2 weeks. And it does look like that is what is playing out. Now, if it does play out, they need to break this low, but will they do it directly, okay, and come down in a direct move, which would be a pretty extended C wave, but not impossible. It would, again, target 4096 or so in this move down, but you have a pretty small A, B here, and then the C wave's pretty extended already. So it is very possible they come down a little bit further, kind of poke this low, and then give us a B wave bounce, and then C down into this 4100, 4096 area. But if they do break down below the 4200 area, then we would expect them to move pretty directly toward this 4100 target. So a breakdown doesn't mean they poke below 4200 and come back above. It means they start to get into the 4180 zone. And really that 4170 area on SPX is that 4200 level we're talking about. So those two kind of coincide with each other. That 4170 is the bottom of the bull pivot that needs to hold. And if that doesn't, then it does make this bearish pattern much more viable and most likely the start to a much bigger move down that I've talked about since last October. So if that is the case, we would come into the 4096 area. Because this is a diagonal off the top, we would look for a pretty strong rally back up towards 4400 or so. This resistance is really strong. I said in last week's video that if we broke through this high at 4422 or so, the bottom was likely in. They came right up to it, and that's where they failed. So they were unable to break through that high, and when they did, they were unable to hold support, and then we came on down. So here we are down testing the lows again. I would imagine whether it be indirectly with a B, C, or directly with a straight move down, we would break those lows and create a new low. For the bulls, they still have hope here. They're still looking at the ability to hold a low that holds the 4170 SPX zone. Remember, we're on the ES here. So 4170 SPX are about 24 points apart or so. So it's going to be about 4195 on the ES. So it is possible for this to be an A, B, C for this wave 4 here, okay, that is also tracing out as a diagonal because it's just how it is. I mean, the pattern with this overlap is just too much, but it would be 1, 2, 3, 4, and then 5 down into that 4200 even area to hold support, and then you'd need to see a 5-wave rally that comes back and takes out this high at 4422. If you see that from 4200 or above on the really 4195 or above on the ES, then we can start to talk about the bulls again. But for right now, the bears are fully in control unless the bulls can hold 4170 SPX and come back over this 4422 ES high. If they can do that, then it does look like we have a bottom in 4, and we'd be looking for a 5-wave move back up for a wave 1, and then a 2, and then a breakout after that. So right now, bears are in control of the market. We would look for either direct continuation to break the low, and again, below 4,200 points us down to 4096 pretty directly, or we can get kind of that A, B, C move down into that 4096 area, because remember, we are dealing in a diagonal, so each wave, this wave 5 is a 3-wave move, and this A, B, C here would be wave A, and then wave B, and then wave C. Or, like I said, they can extend down directly here and see if they're able to break through 4,200. Given the oversold nature of the market and the extension of this C wave, it is reasonable to look for a bounce, but I certainly wouldn't be playing that if I was trading. I would be waiting for the bounce to materialize, stop around 4,300, and then short the market down to the 4,100 area. So that's what we're looking at on the ES. Bears are in control until the bulls can hold 4170 and take back 4422. Over on the NASDAQ, okay, so on the NASDAQ, as you can imagine, we have similar counts, but not exactly the same. And the reason is the NASDAQ's kind of weak overlapping structure up here. It really didn't come down and hit the 1.0 or break through it at all like the ES did off of its AB setup. So the NASDAQ has been weaker. That was another reason we expected the bulls to potentially hold support, as the NASDAQ has been kind of the leader in the clubhouse since last October. And so when we were looking at the NASDAQ, as well as all the factors on the ES, holding this support area seemed reasonable. Obviously, they were unable to do so. So they pushed down, heading for these lows. And we have our diagonal setup. We also have a potential wave 4 that would come down. So we'd bottom in this wave 5 here. I'll draw them out here in just a second. So for the bears, okay, remember we counted this as 1 and 2. And then A of 3, B of 3, and now you'd be looking at C of 3, which, if it continues, should come down into the 13,850 area, which would coincide with the ES coming down around, you know, that 4096 area, dropping about 150 points from where we're at right now. So we would look for this kind of drop in the NASDAQ, kind of a more direct move, because this is a C wave that is extending off of a count that and size that matters. So our size is relative to the waves, whereas on the ES it's kind of extended. So we would be looking for this NASDAQ play out to the 13,850 area, and then the NASDAQ would need a 4 and a 5 to complete the move down, and that move down would come down into that 13,292 area overall to complete its wave 1 down. But again, it would be a diagonal. Then we'd look for a sharp rally there, and from there we would look for a stronger move down. Again, this count is very tough to see how it's going to play out with the ES, as it would drag the ES pretty far down. We could be starting 1 of 3 and then get the bounce, but we'll get to that. We'll cross that bridge when we get to it. This is some of the reasons I've had trouble with the bear count to the downside since the 3-wave move off of the top and the overlap that we saw in this big spike here. So the diagonals can, of course, play out. They are part of it. They are just less reliable, which is why we were not exactly thrilled to have the downside play out, just because it wasn't, you know, as likely in general. For the bulls, we would have a standard A, B, and then a 1, 2, 3, 4 back up into wave 1 territory, and then 5 down here to the 1.0 to complete C. And then, because it's a diagonal, we'd look for a very strong rally off that 14,400 area. Bulls really need to hold that. If they can hold 14,400 and rally, then they are looking very strong to the upside, as this would be much more of a ABC diagonal playing out as opposed to the 5-wave C wave, as this would be much more of an ABC playing out as opposed to a 5-wave bigger diagonal to start the bigger C wave down that we talked about last October and have been talking about ever since in our big picture videos. So overall, we're still looking for a break of the bull pivot. 4170 on the SPX is that number. If they break that, then we would be looking for much more downside and much more pain over the coming years as we would look toward the 3,000 area first, and then a rally from there, and then possibly even lower than that, just depending on how it plays out. We don't want to get too far ahead of ourselves, but we would definitely be looking at the 3,000 area as our next stop in this move down after some rallies. And, you know, it's not going to go in a straight line, but if you go check out my big picture video, you'll see how that plays out. So overall, same as the ES, we're looking for either this bigger move down that would break the pivot, or we're looking for them to hold that 1.0 here at about 14,402. Possibly even a little higher, just any low that breaks down here, and then hard reversal, as this is a diagonal off the top. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link, and it'll take you right over to the website. Once you're there, check out our membership plans area. We have 2 incredible plans, and they both come with a 7-day free trial, because I want you to get in there. I want you to become part of our trading team, part of the community, and make sure you love it before you ever spend a penny. You can cancel at any time. We just started our Elliott Wave for Beginners course. This course is helping real traders make real money and understand the market in a way that finally makes sense. You can see from the reviews on the screen that people are finally understanding the market and able to trade it in a way that makes them money, as opposed to trying to figure out the news cycles when good news makes the market go down and bad news makes the market go up. That is a huge advantage over everyone else trying to figure out the market. It's 25 videos in 3 sections where I go over your introduction, where you go over expectations, mindset and emotion, the KISS method and why it works, your chart setup and tools, every tool you need to use along with Elliott Wave theory and why, as well as the Elliott Wave for Beginners section, where I go over each wave, what its targets are, how it fails, what its failure points are, what to expect when it fails, as well as the theory of alternation, the corrective depth theory, the pivot, all the different things you need to know to understand the market. The cool thing is, it is included in both of our monthly rooms. So if you don't want to pay for the course outright, you can become a monthly member and you get the course for free. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as the training material you just saw. We trade the SPY and the QQQ, and we swing trade, which means our trades last anywhere from a few days to a few months, so we don't trade quite as often as a day trading room does. However, if you are interested in day trading as well as individual stocks, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, day trading, and PT's reduced risk binary method that absolutely crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures his trades. It's so unique. Something you kind of have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. All right, key takeaways for today. For the bears, are they going to take the direct move down towards 40.96, or do we see a B wave bounce and then down? For the bulls, they need to hold 41.70 SPX. If they can hold that and give us a rally back over 44.22, we can feel good that the bottom is likely in, and we're on our way higher toward the all-time highs. Over on the NASDAQ, same type of setup. Are they going to give us this move down to 13,847 for this wave 3 of C? Or can they hold the 1.0 at 14,402 and give us a strong rally back over this high at 15,469 to give us an indication the bottom is in on the NASDAQ and looking towards new all-time highs? Guys, that is the market update for today. I will talk to you tomorrow.